Hello everyone, it's Friday, August 15. Today we're analysing the euro and British pound charts to assess potential market moves. The British pound made several strong attempts to extend gains buoyed by upbeat UK GDP growth data. Growth rates for June and the second quarter beat market expectations, yet this was not enough to secure a firm hold above a new one-month high and sustain the bullish run, despite industrial and manufacturing output also surpassing analyst forecasts by a wide margin. Similarly, the euro rebounded after slight pullback supported by stronger than expected eurozone GDP growth. However, these figures were insufficient to convince the European Central Bank to consider ending its monetary easing cycle. As a result, second quarter GDP data were largely shrugged off by the market, offering only limited support to the single currency. Later in the day, traders turned their attention to robust US inflation data. The producer price index rose by 0.9% in July versus 0.2% forecast, while the annual PPI accelerated to 3.3% from 2.4%. This fueled renewed demand for the US dollar, triggering sell-offs in both the euro and the pound sterling. After all, expectations for a September Fed rate cut subsequently eased. Currently, the euro and the pound sterling are undergoing corrections, and their near-term direction in the first half of today's session is unlikely to be driven by fundamentals, as Friday's macroeconomic calendar is light on key releases from the euro area and the UK. Instead, market attention will shift to US data. Retail sales, a key gauge of consumer spending and shapes economic growth, and inflation trends are expected to have risen by 0.5% in July, following a 0.6% gain in June and declines in May and April. A stronger than expected reading would point to a rebound in US economic activity and persistent inflationary pressures, potentially lending further support to the dollar. Other notable releases include the New York Fed's Empire State Manufacturing Index, US industrial production figures, and the University of Michigan's Consumer Sentiment and Inflation Expectation Indices. Taken together, the day's data lineup offers several opportunities for the greenback to find fresh momentum. Turning to technical analysis, the 1-hour chart shows that the euro-dollar pair is currently trading around 1.1666. A false breakout at this level would generate a sell signal, paving the way for a pullback toward 1.1635. Strong US data could trigger a decisive break below this mark, opening the path to 1601 and potentially 1.1567. At this level, I would recommend going long on a rebound, aiming for an intraday correction of 30-35 pips. Short positions at 1601 and 1635 should only be considered on a false breakout. In a bull case scenario, if the price consolidates above 1666, the euro could rise to 1698, potentially reaching 1729, a one-month high. At this level, it would be prudent to go short on a rebound, targeting a 25-30 pip move. Going short at 1698 and 1666 would only be relevant following a false breakout. Speaking of the pound-dollar pair, the setup is similar. Sellers are likely to regain control of the market around 35.54. A false breakout at this level would trigger a sell signal, bringing the euro down to 1.3518 and possibly even 34.78. The most distant target lies at 34.47, which could be reached if US data comes in strong. At this level, I would recommend going long on a rebound in anticipation of a 30-35 pip move. If the pair moves lower, long positions would be justified at 1.3518 or 34.79 after a false breakout, as the broader uptrend remains intact. On the upside, a breakout and consolidation above 35.54 could push the price British pound toward 35.87, with the potential to extend gains to 36.15 and even 36.43. At these levels, it would be wise to go short on the rebound, targeting an intraday correction of 15-20 pips. Short entries at 35.87 and 35.54 would be valid only in case of a false breakout. Best of luck to all and enjoy the weekend.